Hello everybody, this is Ani Singh and today video is going to be about quantitative easing. The Fed printed trillions of dollars, billionaires effectively doubled their wealth, the rich got richer, and the poor effectively got poorer. But was quantitative easing really a policy to save the US economy, or was it maybe a quick way to boost asset prices and inflate the economy even more than it already has? This is Ani Singh, this is the gray area, and let's unpack quantitative easing. Let's understand both sides of the story. Let's get right into it. So what is quantitative easing, you guys may ask? For the people that don't know, quantitative easing is where the Fed effectively buys treasuries and mortgage-backed securities from banks, who are also known as primary dealers. By this way, it replenishes the bank's reserves with a lot of cash. The goal of QE is for this cash to be used for more lending for the consumer like me and you, boosting investment and pushing this money into the broader economy. That is the goal of QE, and obviously this will lower rates. That is basically the main goals of QE. This, as you can see, the balance sheet's expanding. So they're buying assets, balance sheet expands, money goes into the economy. This increase of balance sheet represents the trillions of new dollars that the Fed injected into the market. So let's see how the rich benefited from QE. Let's see the two extremes. Let's get right into it. From 2009 to 2019, the S&P 500 quintupled, so it increased over 500%. Between 2000 and 2022, U.S. home prices rose over 160%. Now let's compare this to the incomes of the citizens of the United States of America. The income for the bottom 80% of Americans just rose only 40%, while income for the top 1% rose 131%. It's interesting. It's rising kind of in tandem with S&P 500 assets and the housing prices. Now in 2025, the top 10 households own nearly 89% of all stocks and mutual funds, basically 89% of all assets. While they only own 50% of all real estate in America, the younger Americans are locked out of the housing market because of this 160% increase of prices for houses. So yet the housing situation is more spread out within the broader economy. The prices have just gone too far for the average American like me and you, a 19-year-old or someone just getting out of college, to even afford a house. The prices are just out of control. This is a quote from Mark Azandy, a very, you could say, influential economist. He said, in a near zero rate environment, high wealth households do much better. Their portfolios swell. Lower wealth households don't lose. They just don't gain. In 2020 to 2021 alone, billionaires' wealth rose 50 to 60% in just 1 year. For the top 10% of the richest people in the world, their incomes nearly doubled. They got twice as richer in just 1 year. And at the same time, people who save, people like me and you, just the regular consumers who saved, earn nothing. Directly caused by QE, savers actually lost their purchasing power due to high inflation, 8 to 9%. And with low rates, your saving slim to zero if you have that money in the bank. If you were holding cash during this period, you effectively lost money. But now let's look at the other side of QE. Did quantitative easing prevent a greater depression, a severe market recession? Let's get right into it. But without QE, the alternative may have been way worse. In 2008, the credit markets froze and unemployment did hit 10%. We were facing a very great depression and a very severe market collapse. And it seemed like the whole world was going to end. QE did help bring the lower unemployment rate down to 5% from 10%. It stabilized credit markets and stabilized the banking system, essentially avoided a Great Depression. Some research do suggest QE lifted the GDP by 1.5 to 2.5% during this time period. It kept borrowing costs low as well, so small businesses and businesses alike all around the USA could borrow and stimulate the economy that way as well. This is a quote from Ben Bernanke, former Fed chairman, leader of the Fed basically. Yes, QE boosts asset prices, but inequality is mainly driven by tech, trade, and structural change. QE impacts is modest and short term. We'll dive into that further later. In 2020, the Fed's mission was to restore functioning credit markets, and it worked. Mortgage and treasury markets did stabilize, borrowing costs dropped, and a wave of bankruptcy was avoided, and it did save the broader economy from reaching a new low past the 2008 Great Recession and the housing market collapse. It might have been way worse without QE, but QE did effectively save the market in 2008 and back again in 2020. This is a statement directly from the Fed. The Fed argues QE strengthens the labor market market and reduces spending on unemployment programs. Okay, now let's get into the gray area of quantitative easing. From 2000 and 2022, the M2 money supply of the United States grew by over 8.5% annually, far surpassing real GDP growth in America. What does this mean? Well, it's the same amount of goods chasing more money, which is, in fact, artificial inflation for the consumer like me and you. By 2021, 2022, as we all know, inflation hit severe levels, 8%, 9%, 8% throughout the board. And this is a direct cause from the money supply growing way over the GDP. Savers lost again massively during this time period, and the cost of living exploded. So people were operating at a net loss. Consumers like me and you who don't own stocks, who don't necessarily own our houses outright, lost again. And since 2000, wages have grown way slower than inflation. Inflation has been actually outpacing real wage growth in the United States. For the bottom 90% since 2008, we've been operating a decade-long loss. So we're working more hours, and inflation is just eating up at our salaries. And we wonder why our dollar doesn't buy us the same amount of resources anymore. This is a direct cause from QE. And this cheap debt that's been caused from QE, aka low rates, encourage corporations to do stock buybacks. It's where they buy back their own stock and dilute the actual market. The per share price goes up. This didn't really encourage companies and investors to invest something new, create new jobs, create a new product, borrow more money to create a new service. In this low rate environment, these loans were effectively netting these investors and banks a very low amount of cash. And this, in turn, created what's called the search for yield in the financial markets. The bankers, investors, instead of doing what QE was supposed to do, encourage lending, and this search for yield, they went into the broader market, into equities and higher risk alternatives for more yield. Hence why asset prices rose, inflation also rose as well, and wage growth lost ground. So all the while Fed was pushing one message, the markets were taking this money created for consumers like me and you and putting it out into the broader economy, the stock market, and inflating these asset prices even more. And then the Fed tried to raise rates in 2022. They started QT, quantitative tightening, and you see 2022 was a bear market, market collapse, and you've seen a big market correction. So this gets me into the conclusion. Former Vice Chair of the Fed, Alan Blinder, said the only thing worse from some people getting rich off QE is everyone becoming poor from a depression. Assets balloon to historic high levels. Tech stocks have very high valuations, high price to earnings ratios, and there is still a lot of artificial inflation in the economy to this day. The goal of QE was a strong labor market and low unemployment, and QE did achieve that. We have historic low unemployment levels, 4%, 4.1%. But while people do have jobs and low unemployment, we've been operating at a decade-long loss. Savers, regular people like me and you, lost money saving our money. Inflation has been outpacing our earnings, and our money is buying us less and less things every year. All the while, asset prices, housing prices, and the income for top 10% households have risen 70, 100% in the same time period. So, Alan Blinder, what if we already are becoming poor from a depression? Wages have lost ground, inflations are effectively wiping our savings today. Now, it's not like this is make-believe. The rich obviously got richer, so the question comes and arises, did quantitative easing really save the economy, or did it make the rich richer? That is the gray area. Comment down below what you think. Subscribe if you find this educational, interesting. Let's debate it out in the comments. Thank you for watching and have a great day.